Good morning, this is Ron Brown. It is the 18th of December 2021. I haven't done my market analysis yet for Saturday, so I'm going to do that and record it and show you how I do this process. First of all, I open my designer. I go to my groups under market analysis user groups. These are all groups that I've put together over the years. I go into the top folder, Major Markets Plus, which includes some ETFs. I click through to the warehouse, then I click on the quick pick, go to top-down process for market analysis, click on 01. The second one will include the ETFs, but I want to concentrate on the major market indexes for now. So I sort on raw combo. This is a percentage price change, and you can see that the only index here that was up yesterday were the small caps. Small caps were the dominant group yesterday, and that's a good thing, I guess, because if the small caps really break down, then this market's going to go. NASDAQ was second, but it was still down, and you can see if I go down to the Bitcoin Investment Trust, which I have in here also, it was down 5.2%. Okay, let's look over here at the right. You can see the daily range of the S&P closed at about 2/3 of its daily range. Volume was heavy, up 280.9% compared to its 90-day moving average, and the volume change for one day was 221%. So if I bring this chart up, you can see that there's yesterday was triple witching, I believe, or quadruple witching. You can see there was extremely heavy volume yesterday, and that would account for a lot of this volume. But there is a VPA flag here. There's stopping volume. If you look up here, you can see what they are. Strength seen returning after a downtrend. Stopping volume normally indicates the end of bearishness is nearing. Now, if I put a crosshair on here, you're going to see where this stopped right here at support, short-term support, going back to the 1st of December, the end of November. So the short-term or the small cap stocks have to hold up. Let's just take a look at a weekly chart. Actually, rather than doing this, I'm going to bring up another chart. New HGSI charting window. And I'm going to move it over here. Make it the same size. Resize my warehouse down here. And I'm going to go down to the weekly charts with VPA flags only. And let's just look at this. You can see the small caps have had a tremendous run up here, but they went from expansion, a long expansion here, to contraction. They've been contracting for quite a while. It broke out a few weeks ago, but it's failing. And there is really critical support in this area here. If the small caps can't hold above this area, look at the low on this wick right here, that lower wick. If it breaks through here, it breaks through that wick. I'm afraid this market's going to have a major correction. But right now, it's just still kind of holding steady. You look at the daily chart, like I said, the support is right in through here, which translates to this area right here on the weekly chart. And I'm going to switch to a different chart here. I want all the moving averages on here, and you can see that the small cap stocks stopped right at the 200-day exponential moving average. The red line is the 200-day exponential moving average. So there's a couple of areas of support. You can watch the lower wicks on the weekly chart and this 200-day. Those are critical support areas. Now I'm going to move down to the NASDAQ, which is my primary analysis chart. And to get to the NASDAQ chart, I open up the quick pick. I go to the market charts. I click on number 1. And this is the NASDAQ. Now these lines are drawn in automatically. And this is a function of the zigzag indicator, which is available in HGSI. Now, look at the volume here. This is because of options expiration. That's why it's such a heavy volume day. And if you look down here, notice that the advancing volume was greater than the declining volume. Advancers were slightly greater than decliners, even though the index was down a little bit. But new lows have turned up compared to new highs. Now, if I use my alternate, click on this, use my alternate I key, I can move this down here, go down to the bottom, and you can see that the advancers were, well, let me make sure I'm on the last day. Okay. The advancers were 2 billion, a little over 2 billion, and the decliners were 1.359 billion. And you can see the advancing volume compared to the declining volume. New highs 27, new lows 187. The index, the arms went above the zero line, which is signaling a sell. But once again, what we're looking at here is support. You can see that I have the NASDAQ over here now on the weekly chart in addition to the daily chart. Now, if you're an HGSI user and you want multiple charts, you have to bring this tools menu down and make sure that you've linked the multiple charts and the warehouse selection follows your chart, which means that if you click on something down here in the warehouse, that it will show up in both charts. Okay, back to the NASDAQ. So what am I looking at? Well, this volume really throws us off for VPA purposes because of the options expiration. But you can see that there is a red circle in here, which means transfer of ownership, which really doesn't tell us a lot, except it was another wild day in the market with these long wicks on here. You can see that there was a pretty extreme range. Now, on Wednesday after the Fed announcement, the market shot way up. It trapped a lot of people that thought this was the bottom. The next day it gapped open Thursday and sold off, and a lot of people got trapped on that move up, especially if they bought up near the end of the day. And then yesterday was a digestion day, I would call it, with very little happening. Now let's take a look over here at the chart. I'm going to use my alternate A keys. This brings up the annotation tools. And if I click on the extended line here, I'm going to go clear down to the bottom. And the way I draw this trend line is I go from the lowest low, which is back on the left, to the lowest low before the highest high, which would be right here, because here's the highest high. Here's the lowest low. If I draw that trend like that, you can see it's still in an uptrend, but this could be a trend line break if this goes down. Now, as far as horizontal, hold your shift key down, and that'll give you a line across here. This is support, and see the dotted lines that go back here on the weekly chart? This was prior resistance. It broke through resistance here, so this should be a solid support line if this if the NASDAQ does continue to break down. Now, this is a long way from here, but this is just something to keep in mind. Right now, this market's directionless, or the NASDAQ is, because you can see how volatile it is. If I zoom out and close this and bring it up over here, it's this tool right here. You can see how it's gone from I'll just use this one here. From a trending market, I'll fan this off of here. From expansion to contraction, it went from a trending market to a very volatile market. So it's It's trending to volatile. Is it going to break down? Nobody can tell you that. I mean, some people think they probably can, but it's impossible. So you just really need to look for the support levels to the downside and the resistance levels to the upside. Right now, it's a very dangerous, questionable market, and if you don't take on a lot of risk. Let's look at some other aspects of this here. You can see that the accumulation went from D to E to C to B, never did get up to A, which is the dark, and now it's heading down again. If I put my, or point some things out here, volume change because of the options expiration was huge, up 165% of normal. The AD direction is down. The velocity direction is still up. You can see it up here, but it looks like it's barely up. That's over the past 10 days. Let's see what else. We're only 6.4% off the 52-week high and still 22.4% up from the 52-week low. The EMA fan is still up. The EMA fan, for those of you who may not know, is, I'm sorry, I clicked on the wrong thing. I want to move down to the next chart. New highs, new lows. This is the fan, the 200-day exponential, the 100, the 50, and the 18. Now, if this 18 breaks down through the 50, then the fan is no longer in place, but it's currently in place. Now, these are the new highs and the new lows versus the new lows. Once again, if you hit your alternate I key, this information will come up and it'll give you, make sure you're clicked on the last day, check the date, and it'll tell you the new highs versus the new lows. So what have we seen recently? On this move up, starting back here, the new highs are going up. They came down for a day, and then you can see that they shot up. And ever since this chop has started, the new highs have consistently gone down, flattened out, and they're going down again while the new lows have been up. So once again, you can tell just by looking here at the internals, the new highs, new lows, that this NASDAQ is kind of in trouble. Let's go to number 3. This is a chart I just put in a week ago. It's got the accumulation distribution, but here's the main or the key component, the market index. The advancing issues divided by the declining issues for the NASDAQ. And look at that. It moved back up here on this sharp move on the gap up, and it has pretty much been going down other than this day right here where there's a slight change. So the internals are weak on the NASDAQ too, another area of concern. This is a negative pocket pivot, but with the volume from options expiration, it really doesn't tell us much. Okay, now I'm going to do a quick look at the NYSE. There's the same process here. The composite, except I have to go to the NYSE, don't I? And it's really, we really don't get a lot of information out of this chart compared to the NASDAQ. So I'm not going to spend time on it other than to tell you that you can look at the NYSE. You can go to number 5 for the new high lows. And then this is the internals up here with the advanced decline line. Now let's go to the bar charts. I'm going to use bar charts on NASDAQ for Ian's chart, and you can see that there have been some Hindenburgs. Now the Hindenburg fires on certain criteria are met. I'm using the NYSE a composite on this because it was designed for the NYSE, I believe. So I'm going to edit the current view. Let's go in and look at this Hindenburg indicator. The daily NYSE new 52-week highs and lows percent are both greater than 2.20. So there's lots of highs and lows. This one is we're not using anymore, and we haven't for a long time. When this Hindenburg was created many years ago, the market was a lot different than it is now. So we just uncheck this because Hindenburgs will never show up. The NYSE 10-week moving average is rising. The McClellan oscillator is negative, and the 52-week highs are less than twice the 52-week lows. So there's a lot more lows than highs, and I just showed you that. So that's when these triggered. Do I put much stock in Hindenburgs? You have to pay attention to them, but I certainly wouldn't base all of my market analysis upon the Hindenburgs. Other parts of the chart, the Bongo Weekly, which was made by 5 HGSI subscribers, is negative. Been around for a long time, and it's held up. It's a long-term indicator. The short-term Bongo has turned negative. These are both internal relative strength. The accumulation has gone to D. Force indexes are both negative. The Bollinger ribbons are warning. These two indicators, percent B in bandwidth and VFB, percent B times bandwidth, were Ian's indicators. He was the expert on them, but this percent B in the bandwidth shows the relationship of the price to where the bandwidth is, I believe, and the actual percent B times the bandwidth here is turning yellow. So this one, let's take a look back here at this red area. When this turns red, notice it's very hard to see, but this just tells us that the price was outside of the bandwidth, the Bollinger bandwidth. I'm going to edit the bandwidth. Let's make it black, see if that shows up a little bit better. Yeah, a lot better. So you can see here that the price was outside the bandwidth, and this turned red at that point. And then they came back inside, and here's the price relative to the bandwidth. It's near the center. Anyway, there's a lot of red here, a lot of warnings. These are all indicators, of course, based upon price and volume. And like all indicators, they tell you where we are now, but they obviously don't give us any insight into the future. It just doesn't work that way. If it did, we'd all be rich without a lot of effort. I think the only thing that kind of gives us insight into what may happen is some of these VPA signals, which give an indication. Once again, though, they're based upon the what's happening currently, but they can give you an idea of what the sentiment is at time. For example, go over here to the weekly chart. Effort to fall right here, followed by a low volume test, and it's a relatively low volume test compared to the prior week, but that gave us a strong indication along with the candle that buyers were stepping in, and that was the beginning of the bull market. Now there was a lot of negativity here. Didn't think the market was going to go up, but it never really did look back. Okay, I'm not going to spend a lot more time on this. I do want to go back up. I'll go back up to the NASDAQ and switch back over. Whoops, that's the NASDAQ 100. The NASDAQ composites right here. I'm going to go down. I'm going to make this a little bit larger. And now the next screen includes, or that's intraday, I'm sorry. Let's do this correctly. Bring the quick pick up and go to number 2, Major Markets Plus with ETFs. I have both the end of day and the intraday. This is what happened yesterday. Why do I want these ETFs in here? Because I think it gives me a good broad look at the market. in addition to the major markets, I can see what these ETFs are doing. It just kind of focuses what's going on. You can see the VIX futures, the UV, X, Y is at the top of the list. They were up 4.9%, but where'd they close in their range? Right in the middle of the range. Now I'm going to go to a different chart. I'll just go down here to my VPA layout charts. By the way, over the next several days, I'm going to be rearranging things to make sure they're easier to find. Okay, here is, let's go down to the all moving averages. No, I don't want to do that because it compresses things too much. How about just a plain old VPA chart? So the VIX, as you can imagine, is the UV XY is a very volatile chart. And look at this. So it's amazing with all the volatility that it's clear down in this range. Let's look at this on the weekly chart. It's hardly budged. So there's not a lot of fear in the market yet. What this indicates to me is that most traders, or most of the public anyway, the herd, is thinking that this market's just going to go back up. If they didn't, you'd be seeing spikes like this up here, and it's just not happening yet. Oh, that's interesting. So you can see why I bring these ETFs in here, just to start getting a different look. Now I can see that the Biotech shares, this ETF, that was up 2.7%, surpassing a lot of gains yesterday. The Treasury Bond, the TLT, was up. So what happens when the TLT is going up? That means that traders assume interest rates are going up, so yields should be coming down, and that's why it's up. Russell, here's a small cap. You can see it was up. The dollar is bullish. Why is the dollar bullish? It's because all of the other currencies are so weak. Even though there's all kinds of inflation in this country, the inflation worldwide is even worse. So it's all relative. The dollar is relatively stronger than other currencies. Once again, you can see why I put all these together. I'm getting a feel for what the market's doing. Now here's the small cap. Here's an Innovator IBD 50 fund. It was up slightly yesterday. Let's look at the chart. You can see these IBD, based upon the IBD stocks, this has taken a real beating recently. But once again, it looks like buyers are stepping up and anticipating that the market is not going to go much further. Now there's another IBD in here. Let me see if I can find it. Oh, it's right here. It's a breakout opportunities, and this one hasn't fallen nearly as much. Now I don't know what's contained in these ETFs, but this one has held up much better. In fact, it looks pretty similar to the NASDAQ composite. Looking at the weekly chart, just hasn't broken down that much. Okay, I'm going to do the sort again, the percentage price change. Bitcoin is at the bottom, or the investment trust is. And I mean, natural gas, because it's been such a warm winter so far, which is the cause of these tornadoes we've seen in the Midwest. Remember a few months ago, everybody was freaking out about the cost of natural gas. Well, it's fallen from a little above the $22 area to, where did it close yesterday? $12.04. So down $10. Now, if you'd prefer to use just ETFs for your market analysis, I have that in here too. I just drop down to the major market ETFs and go down to my ETF analysis, scorecard end of day, and these are all ETFs. Now, the ARC funds did bounce yesterday, but boy, they've taken a major beating recently. They closed at their high, so you can see stopping volume here, stopping volume here, stopping volume here, and once again, I believe that the speculators are stepping in and thinking this market's going to hold and not go much lower. Okay, I'm going to do a few more things. Where am I right now? I'm right here. These are my broad market indices. Hold my shift key down and let them come through. Major industries only. These are the major indexes, of course, and then the sector indices. And here's the HGSI industries. These are the HGSI sector indices rather than looking at the, let me see if I can locate them here, the spider sector ETFs. If I use the HGSI sector indices, I can go top down from here. Now I've moved to my folder top down scorecard views for HGSI index analysis. I'm currently sorted on the top down percentage price change 1 day. Sorted on that, and you can see the percentage price change 1 day over here, 1.8, 1.1, and so on down the list. Financials were the worst. That's generally not a real great sign, and they have had a pretty rough week. Healthcare was good. Let's look at the chart here. You can see this sector has been going down, but it's kind of bottomed out here. Let's look at the weekly chart. It's been the sector as a whole has been going sideways for quite some time. Geez, this is clear back to February. But you know, we've got a lot of stocks in here, and there are groups within these sectors, and that's where we really want to look to see where the strength was within each of these sectors. The best way to do that is to click into the designer, go up to the reference groups, industries and sectors by industry. And I'm just going to click through to the warehouse view. Now these are sectors by industry. So I can go into the healthcare sector, change to that, and notice how these are broken out to show where the strength is based upon the percentage price change. The Biotech index, which is part of the healthcare sector, was up 4.8% in 1 day. Now this is a percent close to the volume point of control. I should probably move that. Sorry about that. I'm going to move that down. Just, you can drag these down. And now I have the percentage price change here for 1 day and 5 days. And so we can see where the strength was based upon 1 day and 5 day. Now the large pharma, I believe the day before, were up the most. They're up 4.4% for the week. But yesterday they were down 2.8%. Let me bring that up so you can see they were moving quickly. What happens? A herd chases, and the market's down, and profits are taken. Where do we want to be buying these things? Down here, low volume test, and a confirmation of that test on a effort to rise. Let's just go in here, change to the industry group, sort on raw combo. You can see these are all down yesterday after having a nice 5 day move. The ABBV has been a tremendous stock. Look at this stock. Expansion, short-term expansion, contraction, range bound, and then it broke out of here. Now I'm going to drop down to my undercut and rally charts. And this compresses everything as you would expect. But you can see what some great signals there were on this chart. You can see light green for accumulation. Here's a crossover. Didn't do much Here's another crossover. Expansion, contraction. Here's a crossover and then a pullback. And then accumulation. These light bars are accumulation bars. And then it broke higher. Yes, this was a false breakout here. Effort to rise, large white candle inside Harami. It's actually a negative signal, and it did pull back. Let's look at the volume on those pullback days. Volume, you can see, was very light on the pullback, except for this day right here. It was above the 90, which would be right here. But what followed that was an accumulation day. So there was a shakeout, and then we started getting accumulation bars on these candles. No VPA flags, but the candles were showing accumulation bars, and then we had a confirmation on the crossover day with an effort to rise, and this stock went from 117 to, what was the high on this day? 133.28. The 3 remained above the 6 on this buyout. Perfect fan, so we have a pullback yesterday, but this is where the strength was on Thursday, and then the pullback. So let's back up here. Okay, the Biotech index is where it happened yesterday. Look at this, the weekly chart. You can see it's been going down. Buyers are coming in here. There's signs of accumulation on this. The index actually crossed over yesterday with my undercut and rally, but you have to remember, look where the moving averages are. The 3 and the 6 cross, and it crossed the 18, but it's still below the 50, the 100, and the 200. So this stock or this group is clearly in a downtrend, and you have to be careful because there's often a lot of false breakouts which don't materialize. Make sure you look at the moving averages too. But in the short term, it moved up, and there was a pocket pivot too. Everything else, the 6 and the 18, or the 6 is below the 18, that's negative, and the 18 is below the 50, that's negative. Only the 3 above the 6 popped. Popped to the upside, I should say. If we're looking for strength, the easiest way to find it's changed to the industry group. Go to the ranking module. This is what happened the last week. Here's a stock that was up 117%. But, you know, it's a cheap stock. What I like to do is I have my Wilder relative strength set on 14 weeks, and that I recalculate these and go up to the top. And if you look at this chart over here now, you're going to see, let's look at the weekly chart and the daily chart. Here's a stock that was basing for several weeks. Look at all these VPE signals. No supply, no supply. This is a bottoming out flag. Actually, edit the indicator, volume price analysis, display VPA up here. Then if I forget what one of these is for sure, I have the information, strength seen returning after a downtrend. I clicked on here. So sometimes I just don't like to have this up here to keep it clean, so I edit the indicator. Oops, I hit the wrong thing. Sorry about that. Edit the current view, volume price analysis, turn that display off, and then it's clean up there. But let's look at it over here. Now on this particular chart, edit the indicator. I am using the support and resistance lines. I just have this set on number of lines 2 with the sensitivity at 1. So if there's a 1% change, it's going to draw a new line and I can get a quick read on a short-term support and resistance. It's not long-term, it's short-term. So this is a stock that is setting up. I don't know what the news on it is. You have to go check that out. But it has made a huge move already, and it's going up. So there's positive news. Look at the crossover right here in this chart. Here's another one. Here's another one. Okay, I'm going to look at one more. I have not looked at these. These numbers really don't mean anything on the Wilder, so I just like to look at the charts. Here's another one that's setting up nicely. It's been in a really strong uptrend. These are crossover signals based upon the undercut and rally. And this too looks like it's setting up to potentially go higher. I'm not going to say it's going higher, but I'm just saying that these are the strongest stocks in the biotech, and they look like they're all setting up if the market holds together. Here's a less expensive stock. But as I go down these, and this is based over a 14-week period on the Wilder RSI. Now this one moved up sharply, and it isn't closer to the top because, well, it's number 5, just because of the relationship to the Wilder. But this is how you find the stocks that are strongest, and obviously the ones that are the weakest are going to be down at the other end. Some of these are so new they haven't built a history yet. But strength and weakness, remember, the way I have my settings is Wilder 14 weeks, which means that the Wilder Relative Strength Index will be at the top of its range for the stocks that are near the top of the ranking module. Now I'm going to wind this down. It's gotten longer than I wanted it to. I just wanted to give you a feel for prospecting. Even though the market, it looks extremely vulnerable right now, we obviously don't know which way it's going to go. But and don't get locked into to thinking that it's going to go one way or the other, because you can lose a lot of money like that if you get too opinionated. If you do trade, a good way is, if you trade options at all, is to use spreads to protect yourself. But just putting stuff out there naked on, like selling naked puts and so on, can be pretty dangerous if we get a market meltdown. Like I mentioned earlier, the VIX, or the volatility index, really doesn't look like there's a lot of fear in the market yet, even though we had all these wild days last week. So the way I am looking at it right now is it's cash preservation time. I'm not willing to take a lot of risk at the moment. And if I do, I certainly want to be in groups of stocks that are showing strength, and in stocks that are showing strength. I don't think it's an especially great time to be bottom fishing now, although there are always opportunities if you seek them out. I was going to quit, but one more thing I want to say. One more thing here. These undercut and rally scans, especially the top 1, 2, and 1 and 2 with the fans up. These are the good places to look. Now the 3 is under the 6 on this stock, but you can see that the fan is up because that's part of the filter requirement. The weekly chart looks pretty decent, and it's pulled back, but it's setting up. These are accumulation bars, and this is where you should be looking at them, because the 3 is turned up, the 6 is turned up, but it hasn't crossed over yet. But these provide opportunities if the market holds together. This one's a lot sloppier. It's a Arrowhead Pharma. Let's see. Pretty sloppy there too. But you can see the accumulation bars. Accumulation happens either with the white candles or with the VPA or a combination of both of them. Here's a stock that shot way up. I don't know anything about it. It's a biotech stock. It's been going down. There's accumulation. The 3 is turning up. A little bit early to take it, but it just, this screen finds stocks where the fan is up. You can see the fan here, but they've pulled back. But it's still under accumulation now. Number 2, these are crossovers. These are crossing over today. I'm still in biotech only, but you can see here's 2 days of accumulation, and then the crossover was on Friday. This one held up really well. Here's the weekly chart. A lot of uncertainty with these long-legged dojis and so on, and then the big move down. But notice the buyers stepped right into this one and this weekly chart. You can see it right over here at the same time. So strong demand on Friday with a pocket pivot, 2 days of accumulation, and an effort to rise and closed near the high. What do we have here, though? We have resistance bars here. So if the market's strong and the sector's strong, this might be a decent candidate. At least it's worth putting in your watch list if you don't mind trading biotechs. That's it. Thanks for listening. Have a Merry Christmas. I don't know if I'll do a report next week or not. It depends. See how